Now, if you look closely at the Nairobi Stock Exchange over the last 4 years, which I realize there's a pattern, as you can see on my screen. Now, every time around the month of May, the stock prices of the Kenya's biggest companies, they start to dive. Mazinaanza kukaa kama zina crash. Now, this does not mean that the economy ina crash hapana, but you need to understand this pattern because it's very predictable. If you understand this market cycle, then you'll know exactly when you can be able or when you should buy your stocks or your shares in these companies. Okay, now let me explain this. But before we understand like why the market drops in May, then we have to look at what happens right before May. Now, most major companies in Kenya, kama ni the likes of Absa, Coop Bank, KCB, Standard Chartered, they wrap their financial year in December. So from March, that is when they are releasing their financial results and announcing their annual dividends. Now, which is the cash profit, as we discussed in my other video, the cash profit they pay out to anyone mwenye own the shares. Okay. Now, when Kenyans hear that a company is giving out free cash in quotes, what do? Okay, wanaingiwa na FOMO, fear of missing out. And so throughout April, the retail investors, mimi wewe, the mkulima mdogo, tunaanza kuingia kwa market to buy the shares so that we can get our names on what? On the official register. Why? Because of the cutoff date. Okay, so this massive wave of buying stock inafanya the price is shoot, and once the price in a shoot, that is on April sana sana, you realize that on April the price in a shoot, and then comes May. So May ndo when the cutoff date ina happen. Okay, so is the first day where the stock trades without its cash payout. Okay, so kama una buy stock on this day ama baadaye, you are too late, so you don't get that cash dividend. Okay, now because the stock is no longer because the stock now does not carry that immediate cash reward for new buyers, the market inaanzanga ku adjust hapo May ikianza. Yeah, now if a stock was trading to semi at 40 yesterday, because it ilikuwa includiwa a guaranteed 5 bob ya dividend, now today it will instantly drop to around 35 na hiyo anini dividend on top of that. Okay, now big institutions, our investors who only bought in so that waweze ku harvest the cash, start dumping their shares. Okay, kwa nini? Si panda. Okay, si tunataka sasa kuvuna, so we start selling our shares. Okay, so this is what happens. All right, so that combined force creates the massive dips you can see on the chart. Okay, but wait, it doesn't end there. There's a second time the market consistently falls that you need to watch out for. So in the month of August to October, pia hapo kuna kuanga na a certain fall. Okay, now why is this? So there are two reasons. First, companies like kama Safaricom, EABL, they pay dividends twice a year. Okay, now their second smaller payout happens around August, now causing another mini ex-dividend drop. Okay, as we have discussed. Now second, there's a huge amount of money on the Nairobi Stock Exchange that comes from investors in the US and Europe, but most people don't realize this. Yeah, gone over 750 billion. It's crazy money. Now during their summer, hapo July and August, hapo pia there these big fund managers ndo wanaendanga vacation, so trading volumes zinaanza kureduce, so hakuna pesa zinaingia kwa market, momentum hakuna, the prices zinaanza kwenda chini. So hapo September and October pia inakuwa the same pattern inaanza kufanyika. Now my opinion, now because you know these two cycles, rule number one, wacha kubuy March and April. At that time you are chasing the hype. Okay, and you are going to buy absolutely at high prices. Okay, but now remember what I told you guys. If you are buying for long term, okay, well, msimse wa kuingia leo, then maybe after 2-3 months ama ina quarter umetoka, so unaweza fanya nini? Unaweza amua kubuy anytime hata without having to check the graph, because you know in the years to come bado utakuwa in profits kwa sababu una buy mdogo. That is a strategy that people use. They call it DCA, okay, dollar cost averaging, where they say every month I'm going to be buying this amount of shares. I don't care where the price is, I'm just going to buy. Okay, now that is also a strategy that you can use. Rule number 2, if you're buying during the sale windows, that is your first major buying window iko hapo May to July, and then right after the dividend rushes may clear out, and then the second major window iko hapo September to January. Now when the market is quiet, hiyo ndo time yenye sasa unataka kubuy. When the market is quiet, when the market is flat, na usikia a lot of noise in the space wakisema buy nini zimepanda, buy. Every time unaanza kusikia watu wakisema buy, your hype, usifollow your hype. Your time actually ndo time ya kuuza. Anyway, stop buying the hype, anza kubuy the cycles. Understand the market and then anza kubuy these cycles. Okay, all the best.